When the market moves, many times it's because of the NASDAQ making big moves. Some of the most popular stocks in that index happen to be FAANG stocks. People tend to migrate to those stocks for safety. Is that really a smart play? Let's take a look at what they're doing, and let me show you a less risky play to play all of those stocks at the same time. Now, FAANG stocks are interesting, right? Because, the NASDAQ, normally when the NASDAQ moves, a lot of the NASDAQ moves comes from a lot of these stocks that are considered to be FAANG stocks. Now, there's two separate levels of FAANG stocks. You have Facebook, which is your F, Amazon, Netflix, which is your N, Google, which is your G. And then you have FAANG stocks, which are Facebook, Amazon, Apple, Netflix, and Google. All right, so it all depends on what you're looking for or how the original FAANG stocks did not have Apple in it, then it was expanded to include Apple. But one of the FAANG stocks, I've got a couple of FAANG stocks that are in here. Facebook, 25% upside as it climbs to the trillion mark. Apple is already at that. A couple of stocks are getting close to that $1 trillion mark after Apple said it. Why? Because Apple's the best stock in the world compared to what I think always. Apple is the best stock in the whole wide world, but that's just according to Glenn, nothing else. All right, that's just according to Glenn. But that's an awesome story. Facebook is still a buy as 1/3 of the global population uses its platform. Folks, think about that. 1/3 of the global population, that's 33% of the world, uses its platforms. That's huge market share. Holy smokes. With a global population of 7.8 billion, there's 22.86% engagement with daily active users and 34.5% with monthly active users. Facebook is a cash-generating machine, as its first 6 months of 2020 generated an additional 13, almost 14% in revenue than 2019 with COVID-19. Holy smokes. Talk about an anti-COVID stock. So that's one of the stocks in my FAANG stocks. Another one is Amazon. Amazon is on a hiring spree. Good, googly moogly. Hold on, let me put that up there. Good, googly moogly. That's a lot of folks to be hiring. All right, they're hiring a lot of folks. Look at that. Amazon said Wednesday it would hire 33,000 corporate and technology workers across the U.S. in the coming months. You know what that is? Are you picking up what I'm putting down? Are you picking up what I'm putting down? That's a lot of people that they're bringing on board to what? Stimulate the economy. If these people have jobs, they're going to spend it and recirculate it back into the economy. The company has continued to aggressively hire new employees amid a broader economic downturn due to coronavirus. Amazon has already grown its global headcount 34% this year. This is why, again, it's a FAANG stock. Let's go look at another stock in here, Netflix. Now, Netflix is saying that they're not a media company or a technology company. It's an entertainment company. That's kind of huge right there. I think that people look at Netflix as a tech company, but they're saying, no, they don't want to be branded as such. They are an entertainment company. Reed Hastings says Netflix should be classified as an entertainment company. Netflix valuation is far higher than traditional entertainment companies. Man, so they try to put themselves in a space where they can say that they're outpacing that space. If you move them from the tech field, tech branding, into the entertainment branding, now Netflix looks a lot better than a lot of the other entertainment. I'm wondering if that's posturing to make the stock look a little better. Think about that. I don't know if that makes you think that way, but it makes me think that way, that it's posturing to try to look even better in a different space to bolster its value. Just think about that. So all I want you to do is just think about that. The only company that I didn't get out of the FAANG was on Google. I didn't find any specific stories that I wanted. So let's go take a look at my my FAANG stocks. I have that in here. The ones I'm looking at. Look at my list, which is sorted by VST, the best combination of value, safety, and timing. Look at the top 2 stocks in here. Look at the top 4 stocks in here. 3 out of the top 4 stocks are FAANG stocks. That should tell you a little bit about FAANG stocks, right? Facebook, Netflix, and Amazon. All right, Facebook, 269, trading at 269 with a value of 333. Facebook is undervalued. Netflix trading at a price of 487, value of 285. The stock is currently overvalued. And Amazon trading at 3207 with a value of 1143, also overvalued. Now, let's look at the relative values on these. Relative value on Facebook, 1.43. Facebook should outperform a AAA corporate bond by 43% over the next 1 to 3 years. Netflix, relative value at 1.46, should outperform that AAA corporate bond by 46% over the next 1 to 3 years. Amazon, on the other hand, upside potential not nearly as good as Facebook and Netflix. Amazon's got a relative value right at 1. Let's look at the safety on these stocks. Facebook's got a safety of 1.47. This is a good, safe stock. Netflix at 1.42, good, safe stock. Amazon with a relative safety at 1.36. Good, safe stock, but not a good upside potential on Amazon. Now, let's see which ones are in an uptrend. Facebook has got a relative timing at 1.13. Stock is definitely in an uptrend. Netflix, on the other hand, though, it's got a relative timing at 0.94. Not currently in an uptrend. Amazon has got a relative timing at 1.12. Amazon's in an uptrend. And then let's look at their earnings growth. Their earnings growth, Facebook grows their earnings at a clip of 16% a year. Netflix grows their earnings at a clip of 30% a year, and Amazon grows their earnings at a clip of 21% a year. Let's look at these graphs. If I had to look at these stocks and determine which one of these as FAANG stocks I would want, I'm going to open that up, view the stock graph. All right, view the stock graph. If I'm looking at this in a 3-month, wow, Facebook. Even all as good as it is, look at, is it the right time to be in it? Facebook is trending down lower by way of the 3 and the 8. RT is still above 1, but the stock's price is trending lower. Down day to day as well. Let's look at Netflix. Also, the 3 and the 8 crossed to the downside on Netflix on 9/4 last week, right? On 9/4, the stock started turning down. The other one also turned. Facebook turned down on the 3 and the 8 on 9/4. So 2 of them did. 3 of them did. Amazon, all of my FAANG stocks that I'm looking at today, all turned down together with the 3 and the 8 exponential moving averages to the downside on the same day. All right. So I got a little something for you as far as trading the FAANG stocks. Let's go look. I've got a watch list. I've created a watch list of them, but I'm going to give you a little twist behind this. I'm going to give you a little heads up. All right, there's Facebook, there's Apple, there's Netflix, there's Google, there's Amazon. So I added Apple in here. All right. The only one we didn't analyze was Apple. Apple is trading at 114, value of 96. Relative value on Apple is at 1.18. It should outperform that AAA corporate bond by 18%. Apple is one of the safest stocks in here at 1.40 on relative safety. And actually, as far as going up in price, Apple is the fastest moving stock in the FAANG list right now, growing their earnings at a clip of 13%. Now, I'm going to do something. I'm going to look at all 4 of these stocks, view the stock graph. All right, put them on a 3-month graph. I'm not touching Facebook now. Let's go see if they all went negative on the 3 and the 8 on the same day, and they all did. Where's my Apple stock? Apple, they all did. So watch this. If I say that, well, if the FAANG stocks are going down, how can I play them without investing all of this money into individual shares? Well, how about this? We've got something called the BMO Rex 3-time inverted on FAANG stocks. This is the bearish ETF, triple leverage ETF on FAANG stocks. If I right click on it, as these stocks have been going down for the last 4 days, what do you think this is going to do? This should be going up for the last 4 days, right? And look at that. 1, 2, 3, 4, 5 days coming off a low. This is a beautiful way to play the FAANG stocks without as much risk. This is at $10.90. I can play and this is one does not include Apple. This one does not include Apple. This is looking at Facebook, Amazon, Netflix, and Google. But if they're all going down, how about investing $10 in a stock to play that as it's going up? You buy it long. It's a contra ETF. You buy it long. And when you're bullish on the FAANG stocks without putting all that money into it, when it's going up, view the stock graph, you can do the same thing. When they are all going up, look at that. cheaper way. Now, the FAANG U is a lot more money than the FAANG D, but if I'm paying $150 to invest in all of them all at one time, how cool is that? All right. How many of you knew that those two ETFs existed for FAANG stocks? Type a me in the room. Or if you did not, type a no in the room that you did not know that they existed. All right. Cool Hand Luke says, this is why I asked about the valuation method. Apple price higher than value, even though those RV, RS, and RT, VST metrics. So when I look at Apple is overvalued, remember, just because the stock is overvalued doesn't make it a bad stock, Cool Hand Luke. The stock is overvalued because people are willing to pay a premium. That's why we do the additional analysis on the stock. It's got good upside potential. It's a safe stock and it's going up in price. It's overvalued because people are willing to pay a premium for it.
Harry says that yet it has a VectorVest sell. Maybe it's talking about a different stock.
No, if you're talking about the FAANG D, yeah, it will have a sell because the FAANG stocks were going up. So if once the FAANG stocks start going down, this will move. This will move from a sell recommendation. You know what this is called, Harry? Buying low. All right. Would you rather buy a stock that's already a buy recommendation, or how much more upside potential would it be to get into a stock when it's a sell at the right time and ride it to a hold and ride it to a buy? Does that make sense, Harry? Yeah, it is a sell because it's been beaten up because the FAANG stocks were going up. This is a contra. And now when the FAANG stocks go down, this will start going up. It's a sell, but I could be getting in on it early. Hopefully that makes sense. Hopefully that makes sense. All right, so for all of you guys that now know you can trade the FAANG stocks at a lower price point by looking at the ETF, you're welcome. That's why you come to Trending Thursday, folks. This is what it's all about. All right, so I like that. Cool Hand Luke says, but Dr. DeLito always say buy undervalued stocks in a rising market. So for me, I avoid all overvalued stocks. I'm also with you on that. But our mantra is to buy safe undervalued stocks rising in price in a rising market. But when I explain to you, let me show you something, Cool Hand Luke. Apple overvalued. What's the rest of the analysis say? The rest of the analysis says it's a good stock to buy. But because it's outpacing the value, though, people are willing to pay that premium. Enough people willing to pay the premium, the stock's price is going to keep going higher. But does it have good upside potential? Yes. Is it a safe stock? Yes. Relative time. This is all good. So it just means the stock is overvalued. That's why we do further analysis behind just looking at price to value. Hopefully that makes sense.